Hey y'all, what's up? Gal here from Austin, Texas. Today I want to talk to you about the different players involved in the real estate industry. I like to think of the real estate industry as a spectrum, where on one side you have capital, and on the other side you have the property. Real estate, at a high level, is just another type of investment, just like stocks or bonds. So it's helpful to think about it along this spectrum because it helps underscore the role that each player fills. On the capital side, we start with investors and lenders. Investors provide equity financing, and lenders provide debt financing. The difference between the two is simple. Debt is last money in and first money out, which puts it in a more secure position, with little or no upside. Equity is first money in and last money out, which puts it in a riskier position, with theoretically unlimited upside. Lenders, in a nutshell, are just lower risk investors. Lenders usually include banks and insurance companies. Equity usually comes from pension funds, insurance companies, corporations, endowment funds, sovereign wealth funds, high net worth individuals, family offices, and the general public. Next on the spectrum, we have investment managers. Investment managers are firms that invest on behalf of the groups that I mentioned. These are the firms that you typically think about when you think of investment companies. These include private equity, venture capital, hedge funds, etc. Investment managers are generally responsible for picking specific strategies, places, companies, or assets to invest in within their area of expertise. Single investors and lenders will typically allocate capital to many investment managers. Investment managers tend to be a bit more expert in specific fields, such as real estate, technology, commodities, restructurings. Some investment managers have a very wide range of expertise. Next on the spectrum are operating partners. Operating partners and investment managers are often one and the same. Operating partners are essentially responsible for managing the day-to-day of the investment that investment managers make on behalf of lenders and investors. Real estate developers usually fall into this category. Operating partners are generally responsible for assembling the team of service providers and devising and executing the business plan. Lastly, we have property managers, which are the individuals or companies that run the day-to-day of the building. They collect rent, fix things when they're broken, arrange for contract services like janitors or landscapers, and perform general accounting on the property. Between all the groups I mentioned are brokers. Brokers are essentially plugged in between all these groups and help connect them to each other. For example, brokers often help investment managers raise debt or equity. They help operating partners find new properties. They help fill up buildings with tenants, and they help sell properties. Let's do a quick example. Let's say we have a pension fund called Pension Fund 1. Pension Fund 1 has $100 billion to invest on behalf of its members. Pension Fund 1 decides to allocate 15% to real estate, 40% to bonds, 30% to the stock market, and 15% to other. That means that $15 billion, or 15% of $100 billion, is invested in real estate. Now that's a lot of money for one investment manager. So Pension Fund 1 finds 30 investment managers across the country with a variety of different strategies. Investment Manager 1 is a relatively small investment manager, and it gets a $100 million allocation to invest in its strategy, which is to invest in high-end apartment buildings and markets with high barriers to entry in the Northeast United States, both new developments and existing assets. Investment Manager 1 picks 2 operating partners in New York, 1 in Boston, and 1 in Washington, D.C. One of the New York operating partners and the operating partner in Boston are experts at new development, and the other New York operating partner and the operating partner in D.C. are experts at finding existing buildings with strong long-term growth potential. Operating Partner 3 recently completed a building in Boston and hired Property Manager 1 to handle the day-to-day operations of the property. Now, it may seem like I left a whole chunk of the industry out. In addition to everyone I listed, we have a bunch of service providers. These include architects, civil, MEP, structural, and geotech engineers, general contractors, subcontractors, surveyors, and various consultants. These service providers are hired by some of the groups I mentioned before for specific purposes. The main difference between these two layers is that the first layer is actively involved with a property on an ongoing basis and is often compensated directly based on the performance of the investment, whereas the second layer is typically hired for specific projects in a limited time frame and are usually paid a fee that is not based on the investment's performance. Another differentiator you might hear is sell side versus buy side or principal side. The buy side consists of all the firms that are part of the ownership of the asset. The sell side consists of firms that help facilitate transactions. Property managers aren't typically considered part of the buy side, even though they do get paid based on performance, because they usually don't own any piece of the property. One of the very cool things about the real estate industry is that if you like real estate in general, there are a bunch of different jobs that you can pursue. The day-to-day of a broker is very different from the day-to-day of a developer, and the jobs require completely different skill sets. Anyway, if you like real estate but aren't sure that a specific job would fit your personality or your strengths, I hope this video can help shine a light on the different jobs that are available to you. And if you were just confused about what different real estate professionals do, I hope this helps simplify things. I'll see you next time.